you, everyone. If you haven't sit down, please take your seats, because we're gonna the next 20 minutes. I'm gonna share with you my story and my journey on choosing property as a vehicle for wealth creation. Okay, so my focus today is why property as a vehicle for wealth creation, because there's so many other things that you can do. You can do shares, or you can do bonds, bullion. Why property? And you know, as many of you here, you came here for the purpose of that. So hands up, who has invested in property or have one or two properties? Higher, so I can see. Great. Leave your hands up if you have more than 3. Don't be shy. Okay. So, yeah. So it's only about 1%. Which is correct in what the ATO said, and the government, that only 1% have more than 3 properties, okay? So, and we know that property, the more you have, the better, if you know how to structure it right and buy in the right location. The other thing I will cover today is the benefits of property investment, why use development to turbocharge your property investment, and is it a good time to do it now? Because there's so much media hype and noise to say, you know, is it going to crash soon? And obviously I'll talk about the tax implications and what structure you should buy to minimize your tax and in fact pay nil tax. Who would like to know more?
Yes.
Great. Okay, so what's your why? Why are you doing this? Why on this evening, where after work you're sitting here learning about property investment? There has to be a why, okay? So this is my why, okay? My why is my family. So of a family of 5, my journey is a financial one. I met my husband, he's here in the crowd. Thank you, Kwan. I met my husband and we started our family pretty much straight away with my son Vincent, who's wearing that hat there. And then we had 2 lovely daughters who's the life of our life. But in exchange for that, we soon found out financial struggle, because after taking maternity leave, we soon had one income. We were employees at the time, we were professional employees, but with one income, it was a struggle. I think you can relate to that. I'm sure people who have families and kids will know that one income and after tax is not enough. So what I found is I met with a mentor. I found a great mentor who taught me that how to buy property without any money. So he was a mortgage broker. There's a couple of mortgage brokers here, and he was a self-made millionaire and retired financially. And with this blessing, I went on to choose property as my main wealth creation. So I'm going to share that tonight with you. So then you can also do the same. Okay. So what's in it for me? So if you want to create a second income or quit your job or business, I hope none of people here, but if you want freedom and flexibility and you want to grow your money or you want a passive income. So if you want this, you're in the right place tonight. And I'm going to give you, because your commitment, I'm going to give you 150% value and information tonight, because it took me a decade to learn all this from mentors, and I'm going to give it to you in 20 minutes. Okay, so listen up. So why property as a vehicle? You can see here that there's a couple of asset classes. There's the Australian shares, there's the property market, and there's Australian bonds. Please note that we're talking about 100 years, okay? So this is from the data collected over 100 years. So what that means is that it spreads out all the volatility, and you can see that Australian shares is slightly better than real estate. But why do I choose property? And so many of my, multi-millionaire and billionaires choose as well. Because I'll show you an example, a simple one, which I share with many of my clients. So if you have $60,000 to invest, okay, say that's your deposit, and you know that if you buy property, you need 20% deposit. Can everyone see this at the back? Yeah? Show of hands if you can't. No? Okay. So what this means is that with 20% deposit, you can borrow and buy a house 300K. Now, if there's mortgage brokers in the room, okay, if you have a different answer, come and see me after. So this 300K, as you can see on the screen, you'll get a return of 11.1%, which is roughly 11%. That return means 33K on average per year. Follow that, everyone?
Yeah.
So with shares, which is more, okay, shares, if you have 60K, then at 11.4%, you have roughly 6.6K per annum. 33 less 6, that's the difference. Because banks would love to lend you on this, 80% on secured property. Banks don't really like to lend on shares. Okay, so same money, but you are actually going to be worse off in shares and much better off in property, about $20,000, 27K per annum. And that's just a very simple exercise, and that's only on 60K. Okay, now I beg to, if anyone disagrees, if you're a share property investor, I'm sure you can do really well in shares as well. But for me, as a lazy investor and with a family of 5, I like mine passive. I like to set and forget and make money while I sleep. Okay, all right. So now you know that why I chose property, because of the example there. And what are the other benefits of property? You can see that the first thing that you need to know is the only money you need to put is a deposit. The rest is the bank's money. It's called, we say, OPM, other people's money. Now, I think that's a great way of creating wealth. And you have a team, meaning that you have your brokers that are helping you to lend you the money so that you can create wealth. And your accountant or your solicitor to help you to achieve, structure it correctly to minimize tax. The tax benefits, there are a lot, which I'll cover later on a bit more. And the capital growth. 2 little words. Write it down, guys. This is what I found about 10 years ago. When I first started in property, people were saying, why are you buying property when clearly the interest and the expenses was actually more than the rent you receive? You're actually negative geared. Why? Well, these 2 words show me why. And as you can see before, over 100 years, it actually increased 11% each year. Let me show you an example. Okay, so back to our problems. So before, I only had 300,000, yeah? In 1 year, I made 33,000, correct? What about if my asset base is 1 mil? Can anyone shout out the answer? What would be my per annum income or equity? Thank you. James, down the back. So actually, now it's 111K. So do you see a pattern? The pattern is the more the asset base. What about if it's 10 mil? I'm running out of paper. What about 10 mil? Who wants to make $1 million a year on equity? Hands up. Yay. What a fantastic business while you sleep, by the way. Okay, no headaches. So the goal that we want today is increase your asset base. Don't worry about paying it off, increase your asset base. And to do that, you need the right structure, minimize your tax, and we'll go into that. So just get that concept in your head, and that's why we love property. Okay. Income growth. Of course, the rent will increase with inflation, okay? So that will increase the passive income. And therefore, at the top, financial freedom. And that's what financial freedom doesn't mean just lots of money. It means the freedom for time and having that lifestyle that you want right now with your family. Okay, So now that, so who, hands up who agrees that property is a great vehicle for wealth creation? Great. So I haven't lost anyone. So why develop property? You're thinking, well, if you're making, if you're creating wealth through this way, why not just stop here and just continue? Anyway, but in 2009, I actually did my first development in Mount Waverley, and I discovered that I was paying retail price, meaning that I was paying a lot more if I bought retail and a lot less if I would develop. Okay. So, as I said, if you develop a property, you won't pay stamp duty. Whereas if you buy retail, you do pay stamp duty. And you can accumulate more property faster by developing. Let me show you an example. So here's a case study for you, just to put the numbers. I love numbers, so I want to show you and prove to you that you can actually generate faster wealth through developing. Hands up who has developed before? Again, so I know. Just 1, 2. Okay. So you know what I'm talking about, Andrew, don't you? But for the rest of us, let me show you what you've been gypped off. Okay, so you're buying a property for $500,000, yeah, at retail. What you have to pay is stamp duty, another 16. Okay, can you see there? So 516 is your total cost, correct? Yep. But what the developers know, which I'm revealing their secret, is you pay the land. Construction is about 250K. The land itself, maybe 200, or even less. Say 200. Then I should try to make it to 410, shouldn't I? So let's say, 160, yeah? So that's 410. Because land itself, if you subdivide your house, and you've got a big backyard, you can subdivide the land. The land could be free for you. It's just sitting there. But say if you bought a subdivided land, you'll pay much cheaper than buying a property. So the construction cost itself is only 410. The beauty of this, no stamp duty. I'm sure Shanice can verify that for me. 410 less 516. Can anyone tell me what's the difference? 106? 106? Yep. Great, thank you. Have some smart people up front. 106,000. That's day one, by the way. So, developer, she developer, and she investor. Probably this one. To get to 106, equity is 3 years. This is day one. So what are you guys waiting for? Why aren't you doing it now? And I only found that in 2009 though, so I must say I got a mentor and that helped me fast track and turbocharge my wealth because of development. And I'm going to show you what I did for one of my developments later on. But if we have time, okay? Do you want me to show you what I did? Yeah. Yep. Okay. Let's just do that. All right. What I did for my Mount Waverley was, and Mount Waverley in 2009 wasn't as hot as now, okay? But I bought a land, we bought a land, and we had this house on the corner block, which I know, look, this was my first one. So there's a house there, okay? We subdivided and sold the land at the back for 370K, okay? 370K. This house, this land or old block was bought for 640 plus stamp duty. So say 40K, okay? So that's 680,000 altogether. With plans and permits, say another 40,000, or actually say 20,000, yeah? So that's 700. Okay, so everyone follow so far? Yep. At the back, yeah? So what this means is that the whole cost of this too is 700. Now, obviously I got now money, 370, and I engaged a builder for 400, say at the time was 400,000 to build my 35 square or 32, whatever, home. on this remaining. So this was 310 and this was 410 square meters. Yeah? Yep. So what now is that with 400 plus the 700 is what? 1.1 mil cost. But I've sold this already. So really it's saving, 370k. So what's that left? Oh, good, thank you. Oh. Glad you're seeing it. So 640 cost, okay, to buy a 35 square, 4-bedroom townhouse in Mount Waverley today. Would anyone want to buy my townhouse for 640? Yeah. Hands up. Only 3 people, okay, that's fine. It's not for sale, but the agent valued at 1.4 today. So that's a profit, if you can say. More. 1.4, take away 640. Oh, okay, so it's a lot of profit, By the way, if you buy that 1.4 is plus stamp duty 100,000, right? Okay, so that's 1 point. So the cost, the saving for our family is 800,000. Okay, and that's just really being developing a simple corner block. And you can do the same. You can do the same. Okay. So now is a good time to develop. It's always a good time to develop because you have to look for sites that can develop, and you need to do the numbers at the start and make a profit and agree on making the profit at the start. So when we bought this, we already knew that we could sell this and make a profit. But obviously over time, you can make more profit by holding on to the land bank. At the moment, it's very interesting, the market. We have very low interest rates, as you know. The prices are booming. What that means is more competition with the land banking, but the vendors are willing to sell. So you get a lot of good properties on the market at the moment to pick from. And there's undersupply, not apartments, but undersupply of good townhouses for families. So it is a good time to develop. The next step I'm going to talk about is get structured. Obviously, I made a lot of profit. Am I going to pay 47% tax on this?
No, definitely not. You're an accountant.
Thanks, Shanice, for the vote. No. So you need to when do you need to see an accountant before you purchase the land? Because depending on your intention will determine your tax implications. So I'm going to go through. These are the common structures to developing, okay? A lot of people buy the land, buy the property and sign their name, okay? But there's other structures that are more favourable to minimise your tax, such as a family trust. As you can see, compared to your rental income in the individual is 47% and none in the trust. Compared to a company, and you can clearly see the super fund is even 0 if you're after 60. But if you're under 60, it's only 15%. Capital gains, it's reduced to 50% for the individual, as you can see here. And the company, well, it should be 28, you should say 28.5. In a super fund, it's only 10%, okay? And there's none in over 60. Asset protection, if you run a business, very important. You need to know this because no in the individual and yes in the other structures. Can you distribute? Yes, you can in the trust, but no. So that means the profit stays with you and you get taxed on the 47%. This is such an important to know because there's no point making such a good deal and then paying half of it to the government. That's no way to create wealth and for your family. So how should I go about developing? Well, there's 2 ways to develop. There's one, the business way, where you actually buy the property and you develop. There are GST implications on that. But the best way to develop is when you merely realise an asset. That means you live in your house, you've got a backyard, you subdivide, and you maximise the resale value by putting a townhouse. And you only do it once though, okay? Then that one you only incur the capital gain, and that one is you get the 50% discount, so no GST. And I'm going to show you a table here because tax is complicated, but you can take photos of this because depending on your situation, there's so many situations and the tax implications will apply, you see. So there's no one situation fits all. And I really recommend that you come and see us before you decide to do anything, because the best way to develop is the way to minimize tax, isn't it? So, okay. So I'm not going to go through all this because this will take a 3-hour talk, but come and see us because we have the answers for you to minimize your tax. Okay, who likes Bruce Lee here? To know and not do is not to know at all. That's his saying. What wonderful man. And what I taught you today in 20 minutes is knowledge. Are you going to go out and do it tomorrow?
Yeah.
Thank you, Michael. So I know that's why we offer this, because we know that first-time property developers is only 2. It's a very daunting process. And if you have someone, a team that can help you with the property review before purchase, the property, whether it can be subdivided, the structure review, to make sure that you're paying your only fair share of tax, the cash flow review, what's your net cap, what's your return, the loan review, are you able to claim the deduction, and the deduction review, to make sure there's more cash flow in your pocket. And this is just a testimony from a client that came to us and wanting to do a development, and she, 8 townhouse development, and we helped her through that process. And she's now bought 2 blocks in Ballarat, and she's, with the help of Shanice as well from Verity Law, we're helping her to achieve her goals. Thank you, everyone. Thank you for your attention. And I look forward to answering your questions at the end of the session. In the break, there will be, our team will be at the back to answer any of your questions. And I thank you for your time. Thank you.
Hi, I'm Phil Casisa. I'm here at the How to Subdivide Your Backyard seminar, and I've really come here to learn as much as I can about investing in property and growing my wealth through property. I work in the industry and I'm surrounded by these people every day, but you can always obviously learn more. I got introduced to the Success Accounting Group through Shanice Hong at Verity Law, and so far I've really enjoyed what they've had to offer and the insight and the information they've provided. And I'd be recommending other clients and some of my other personal networks to come through, because there's a lot of money that can be made through property.
Hi, my name is Chun. I'm the banker of Westpac. What I've been doing is actually very interested about property market. I always wanted to learn more. Even our job every day, still it doesn't give us the nitty-gritty things about the property development. So I'm here to learn. I found out the Success Accounting Group is from one of my colleagues, so she's working quite closely with the group, and the feedback has been quite good. No, I haven't worked with Success Accounting, but I really do look forward to after the seminar, because I think they provide some really valuable information. And since the seminar, I think I'm quite confident that I would love to recommend to some of my clients. I think some of the clients that would in need of their help.
Hi, my name is Bew. I came here today to the seminar, How to Subdivide Your Backyard. I learnt about today's seminar from a business colleague. I learnt a lot today at the seminar on the different options of on tax structures and what to do and where to get advice, and I would highly recommend Success Accounting Group as your first place of contact to do that. Thank you.
My name is Longs. I'm just invited by Andy, which is working for the Successful Accounting. Today we've been listening about how to subdivide the property. So we just give us a lot of information about how to do a tax return, how to subdivide the land to make you more money and save a lot of money. I would love to recommend this to my friend, which is very good, give you a lot of knowledge how to make money on the property. Thank you for that.
Hi everyone, my name is Dylan. I'm here at the How to Subdivide Your Backyard seminar. I learned about Success Accounting Group through some mutual clients, and I've been in talks with Lan, looking after my accounts personally and all of my clients for probably the last few months. I came here to learn a little bit more about obviously the effective structures in subdividing your backyard, and I would recommend Success Accounting Group to all of my clients. Have a great day.